Hello dear students, welcome to Devika's Commerce and Management Academy. So today we are going to work out one last problem. So this problem will give you clarity about this chapter. So first of all, in this problem I have taken lots of adjustments, like capital reduction means preference capital and equity capital, both reductions will be there, and creditors reduction, debentures reduction will be there, appreciation of assets and depreciation or reduction of the assets. So all kinds of transactions I am taking in this problem. If you focus, if you understand this problem, you can work out any kind of problem, I am sure. So without wasting much time, let's get into the problem. The problem is given on the desktop. Please note down. So first I'll read the problem so that you can understand the problem, then after that we'll go for working out. Already I have done, just simply I'll explain it. Now the problem is here. The following is the balance sheet of Jupiter Limited as on 31st March 2012. So balance sheet is given. If you see the balance sheet asset side, buildings, machinery, patent, stock, debtors, profit and loss account, preliminary expenses. Okay, simple. And liability side, share capital. Share capital is, first one is 20,000 equity shares of 10 rupees each, fully paid up, 2 lakh. This is equity shares. Means 20,000 equity shares are there. Each one is 10 rupees. 20,000 into 10 comes to 2 lakh. It is given in the outer column. Next, 500 shares, 12% preference shares of 100 rupees each. 500 shares are there. What are these shares? Preference shares. 500 into 100 comes to 50,000. 50,000 is given on the outer column. This is preference shares. 2 lakh was equity shares. Now 50,000 is preference shares. Okay. Next, 10% debentures. Debentures are 1 lakh. Trade creditors, trade payable we will say, right? In the balance sheet, trade payable we will say, but right now trade creditors are 3 lakh, outstanding expenses. Balance sheet is okay. Now coming to the adjustments, you need to be very careful about the adjustments, each and every adjustment. First one is that with a view to reconstruct the company, it is proposed to, first one, reduce the value of equity shares to 2 rupees each. Value of equity shares, we have to bring it to 2 rupees each. When we want to decrease the equity capital, what is the entry? Equity capital account, equity shares account attached to equity shares account to capital reduction account. I have written that. Equity shares account attached to equity shares to capital reduction. How much we wanted to bring it? 2 rupees. Original value was 2 lakh rupees. Original value given in the problem is 2 lakh we have written. How much we wanted to bring it? 2 rupees each. So 20,000, how many shares are there? 20,000 shares. 20,000 into 2 rupees, which comes to 40,000. Originally 20,000 into 100. This one is 20,000 into 100. Now we wanted to bring it to 2 rupees only. 20,000 shares into 2 rupees. It comes to 40,000. Now capital reduction means how much is the reduction? 2 lakh minus 40,000. So this is 1,60,000 is the reduction. We know it already, we have done in many problems. This is about the equity shares. Now BBT is here. Reduce the value of preference shares by 40 rupees each. Each preference shares we have to reduce it by 40. Means we have to make it to 60. Are you getting this point? Reduce the value of preference shares, each preference shares by 40 rupees each. 40 rupees they wanted to decrease, means they wanted to make it as 60 rupees only. So you'll say that preference shares, what is the entry? Preference shares account attached to preference shares account to capital reduction. Entry we have written. So how much we wanted to make it? Reduce it to 40 rupees means make it as 60. How do you got 60? 100 minus 40. Reduce it by 40 means how much we wanted to keep? We want to keep it with us 60 rupees. So we have calculated at the rate of 60 rupees. How many shares are there? 500. 500 into 60 comes to 30,000. Now this capital reduction is 50,000 minus 30,000 is 20,000 is the capital reduction. Okay. Okay, preference shares over, equity shares are over. Now third bit, reduce the 10% debentures by 10% and reduce the rate of interest to 6%. Debentures we wanted to reduce it to 10% less. And percentages also they are decreasing 10% to 6%. What is the entry of debentures? Debentures account debtor to debentures to reduction. Now here percentage is given. So we are saying 10% debentures account debtor. How much we are reducing? 6%. So to 6%. What did I write? Interest 6%. So you'll write 6%. 6% debentures account to reduction account. But how much we wanted to reduce? 10%. Original value is 1 lakh. 1 lakh minus 10%. 1 lakh minus 10%. 10% comes to 10,000. So 1 lakh minus 10,000 comes to 90,000 we have written. Now difference is 10,000 goes to capital reduction account. Clear. Next one. Debentures is over. C bit. Next fourth bit. D bit. Trade creditors agreed to sacrifice 1,30,000. Trade creditors they wanted to reduce by 1,30,000. What is the entry? Trade creditors account debtor to trade creditors account to capital reduction. Entry is this. Same like previous three. Trade creditors they want to reduce by 1,30,000. Means the reduction amount is given. How much is the reduction? That is this one is given. Generally they'll say reduce it by 1,30,000. But here it is they said that trade creditors agreed to sacrifice. Means this amount is given. Okay. So what is the original amount? 3 lakh. 3 lakh minus this comes to 1,70,000. 1,70,000 is reduction. So leftover is 1,30,000. 1,30,000 was given. Okay. So this is about the trade creditors. Next after that, appreciate the value of building. Generally after writing these 4 entries, we'll pass the last entry. What is that? Capital reduction account debtor to whatever we wanted to reduce it from the balance sheet asset side. So those will be writing on the credit side, right? But now here, appreciate the value of building by 40,000. Building value we want to appreciate. Depreciations, these are all. Building value is appreciating. Means reverse to this entry. Means buildings account debtor to capital reduction. Whenever we wanted to decrease the asset values, capital reduction account debited. Now here asset value is increasing. So capital reduction will be decreasing. Okay. So buildings account debtor to capital reduction account. How much it is? Depreciate by 40,000. Buildings value is 2 lakh. So where it is 40,000 we wanted to reduce it. Simply whatever you are reducing. Buildings account debtor to capital reduction account. Next last entry is so far whatever we have allocated for capital reduction, all the amounts we wanted to utilize to write off some of the assets. Now what are the capital reduction amounts here? You can see one is 1,60,000 and 20,000, 10,000, 1,30,000 and 40,000. All these amounts if you total up, you will be getting 3,60,000. Credit side it was there. Now we are transferring to the debit side. Capital reduction account debtor. What do you want to write off? It is given in the next point. F bit. Write off all fictitious and intangible assets and reduce machinery by 60,000, stock by 10,000 and create 5,000 provision for doubtful debts. Okay. So what we have to do first of all, profit and loss account is there. Now that always it will be given in the problem. Though it is mentioned or not, we have to write off this. So first point to profit and loss account. Then write off all fictitious assets. What are the fictitious assets? If you see the balance sheet, one is I am finding patents. So this was profit and loss account already taken. Next fictitious asset patents I found. Patents are written here. Then after that Preliminary expenses 30,000. Okay, fictitious assets are over. And reduce machinery by 60,000. Machinery 60,000. Stock 10,000. And create 5,000 provision for doubtful debts. Create not bad debts, doubtful debts. DD I'll say. Doubtful debts. Provision for doubtful debts this much. Over all the transactions, right? Now to close this entry, 3,60,000 minus all these amounts. Whatever we get the difference, that we call it as a capital reserve. We already learned it, right? So capital reserve. This is the balancing figure. 3,60,000 minus all these amounts. It is 50,000 I am getting. This 50,000 I am going to utilize it in the balance sheet as a reserves and surplus. Showing in the balance sheet as reserves and surplus, this one. In the previous problem, we didn't get this reserves or surplus. We didn't get the capital reserve. In the previous problem, the balancing figure should be treated as a reserve for bad debts, they said. So in the previous problem, this amount, capital reserve, was not there. Now here, capital reserve is there. Whenever you find capital reserve, use it in the balance sheet as reserves and surplus. Am I clear about these journal entries? Yes. If journal entries are clear, balance sheet is very easy to prepare. Now, as I told you, company accounts balance sheet vertical format we used to prepare. In the same fashion, you have to prepare the balance sheet vertical format. So already I have drawn this. Now this is balance sheet of Jupiter company as on 31st March 2012. Now coming to the balance sheet, you have to focus first on the liabilities. Liabilities, what do you say? Equity and liabilities. Under this, two columns you can say. One is shareholders funds, not two, three columns. One is shareholders funds. Second one is non-current liabilities. Non-current liabilities is nothing but long-term liability, debentures, okay, or any other long-term loan. And third bit is that current liability. Three parts. Now you look at the balance sheet first. Balance sheet, given balance sheet. Shareholders funds means two funds. Shareholders funds. One is share capital and reserves and surplus. We already learned. Shareholders funds means share capital and reserves and surplus. Share capital means what? If you see the book problem, share capital means nothing but preference shares and equity shares. Okay. Now preference shares and equity shares. So this I am showing in note. So note which is accompanying to the balance sheet. Share capital. Two share capital is there now, that we are showing it here. Equity shares and preference shares. How much we are writing equity shares? Leftover shares. Original was this much. And we have reduced to so and so level. So we got it this much. We reduced to 40,000. So this only we are going to write. No confusion. I'll remove all these ticks. So shareholders funds, what we are taking? Equity shares means 40,000. Okay, we have calculated up each one to 2 rupees. That is the original value. Previous one was this. Now right now it is 40,000 only. So 40,000 I have written. In the same way, preference shares. Preference shares is also 50,000 it was, but we made it to 30,000. So 30,000 I have written. So total is 70,000. 70,000, writing it as a share capital as per the note number 1. 1 is written. Clear? Then after that, reserves and surplus. Under this shareholders funds, share capital, reserves and surplus. Reserves and surplus is how much? This one, 50,000. Capital reserve is, we are showing it as reserves and surplus. So reserves and surplus it is as per this 50,000 written. These two are over balance sheet. Next, debentures are there. Debentures, we are saying it as a non-current liabilities. Non-current liabilities, or you can say it as long-term liabilities. Debentures. Debentures value is also as per the balance sheet. It was 1 lakh, but now debentures value got decreased to 90,000. So 90,000 only I have written. Clear? After debentures, what else is there? Trade creditors. Trade creditors always you will say it as a, it comes under the current liabilities. Current liabilities. Trade creditors, we never say creditors, we say it as a trade payable. Trade payable. Trade payable is also 3 lakh it is, but there is an adjustment I think. Yeah, 3 lakh it was. Now we reduced it to 1,70,000. So 1,70,000 only we are writing as trade payables. Trade payable means nothing but creditors. Apart from that, we have outstanding expenses. We don't write it as outstanding expenses. We say other current liabilities. Other current liabilities. How much it is? 50,000. Assets liability side is over. Now coming to the asset side. Asset side, two parts you can say. One is non-current liabilities, non-current assets, and current assets. Only two. Non-current assets means nothing but fixed assets. Non-current assets means fixed assets. Another one is current assets. Let's focus on the non-current assets, which is fixed assets. Fixed assets, what do we have? Look at the asset side. We have building and machinery. Only two assets are there. So that we are showing in note number 2. Buildings value, it was given 2 lakh, but there is an appreciation for the building. So building value is 2 lakh plus appreciation 40,000, which comes to 2,40,000. Machinery 1,30,000, but there is a depreciation. 1,30,000 minus depreciation is how much it is here? Machinery is 60,000. So this deducted is coming to 70,000. Total it is 3,10,000. 3,10,000 we are showing it as a fixed assets. Clear? Next, coming to the assets, the rest of the assets after fixed assets, everything is current assets only. In current assets, if you see, patents already we have write off. Stock is there. Stock we say it as a inventories. Don't say it as a stock. Inventories. Inventories, there is an adjustment I think here. Stock is reduced to 10,000. Original stock was 80,000. 80,000 minus 10,000, which comes to 70,000. This is inventories. We don't say it as a stock. Okay. Next, debtors. What do you say? Trade receivable. So trade receivable. Debtors also there is an adjustment. Provision for doubtful debts. 5,000 is there. Okay. Always you have to be careful. Now debtors are 55,000 minus provision for doubtful debts 5,000, which comes to 50,000, and total up. Both the totals are same. It means problem got tallied. Balance sheet is clear. Am I clear? First take a screenshot, then after that I'll give a gist of the same problem. This problem covering most of all the transactions. So all the adjustments like deduction of preference shares, equity shares, debentures, and also creditors, 4 comes in the 4 journal entries. But while reducing, we have to be very careful how much, what they are saying. Okay, so we have passed these entries. Apart from this, generally you will pass this entry. Generally the assets will be decreasing, but only building value was increasing. Increasing means capital reduction will be on the credit side. If it is decreasing like this, capital reduction will be on the debit side. So buildings account attached to capital reduction. Last entry is as it is. Whatever we have accumulated capital reduction total amount, that amount is written here, means 1,60,000 plus 20,000 plus 10,000 plus 1,30,000 plus 40,000. All this total comes to 3,60,000. 3,60,000 is utilized to decrease the asset values. What are the asset values? What we have to deduct? First thing is that profit and loss account anyhow we have to every time. And intangible assets also always it will give given the problem. Intangible assets we found patents and preliminary expenses. And apart from that, they said the machinery value, stock value, and what else? Provision for doubtful debts they gave. So we got how many transactions? 6 transactions. 3,60,000 minus all these 6. You get the difference of 50,000. This 50,000 we call it as a capital reserve. Capital reserve will be utilized for the balance sheet reserves and surplus column. If this is clear, coming to the balance sheet. Balance sheet is very simple. Liabilities, three parts are there. One is equity, shareholders funds. Shareholders funds means share capital and reserves and surplus. Shareholders funds means this you got it from here. Equity shares plus preference shares. Which value? This value. 40,000, 30,000. Okay, 40,000, 30,000 you got it. In the same way, next shares are over. Next, long-term liability. Long-term liability, we can say it as a non-current liability also. What is that? Debentures only. Given was 10% debentures, now it has come down to 6% debentures. 6% debentures, what is the value? Debentures value is here, 90,000 we take. 90,000. Then current liabilities. Current liabilities, we have leftover creditors and other current liabilities. Outstanding expenses are there. Now creditors are here. Creditors, we don't say it as a creditors. Trade payable will say. Trade payable. But for creditors also there is adjustment. We have to take 1,70,000. So creditors where it is trade payable 1,70,000 we have taken. Other current liabilities this much. So total is this. And coming to asset side, only two parts we have to say. Non-current assets, or you can say it as fixed assets, and current assets. Non-current assets, we are saying fixed assets. Fixed assets we got two. One is appreciation, another one is depreciation. And another one is in current assets. Apart from fixed assets, current assets. Current assets we found two. One is inventories. Inventories depreciation is there. Where is inventory? Stock. Stock we say it as inventory. And also debtors. Debtors means we say it as a trade receivable. Debtors also there is adjustment. So amount is 55,000, adjustment is 5,000 minus. So you got. That's it. With this, chapter is finished. Next what? Let me know in the comment box. Did you understand? Please, if you understand this problem, without looking at the solution, try to work out and see. You'll have that confidence. Once if you understand, don't stop. Take out your textbooks. Try more problems. The more you practice, the more you feel easy. And by the way, are you following the playlist of our channel? Many subjects already covered. And I'm trying to explore many more subjects, many more chapters also. It's because of all your interest and encouragement. Please do share these videos and let me know your views in the comment box, whether you are understanding before exams, after your results, everything. Please do share with me because I can't see you all. So I just want to hear from you through the comments at least. Stay connected. Wish you good luck. Take care.